if you are new to investments in general, this is a fantastic place to start because often people just don't know the difference between the two, and it's important. So spread betting or day trading is very much looking at volatility. You're looking at how a price moves, how an asset price moves, and you're trading based on that volatility. So you're essentially just looking at a graph. Is the price low? Do I think it's going to go up? Yes, based on on trading ranges or whatever these people use. And then you take a position based upon that. About 70% of people who spread bet, who day trade, lose money. So let's talk about time horizons. If you are a day trader, a spread better, your time horizon is very short. You're talking generally 24 hours a day to maybe a week, but not much longer than that really. Just a week position, a couple of hours position, and that's it. You're in and out of the market. You're looking at where the price point is now, where you think it's going to go, either up or down. You take a call or you take a short, and that's it. You just trade on that volatility and you trade on them margins there. If you're an investor, you're looking at the fundamentals of a company, how it's run, who runs it, the credentials of the directors, SWOT analysis, pestle analysis, like medium long-term plans, cash flow. There's a lot more to it, and that's what I hope to provide in this channel and in future videos, which is something I think isn't covered in as much detail as it should be online. Like I said, you get a lot on spread betting, but not a lot on proper investing, and that's what I hopefully would like to produce in the future. Let's talk about risk. There are a few reasons why spread betting is generally considered slightly higher risk than investing. Now, obviously risk return, all that sort of good stuff, but just purely on the risk itself. If you're a day trader, you are not looking at the long-term fundamentals of a business. Generally, you might, but most of them don't, and therefore you're taking a blind position on a company. You're looking at volatility, you look at trading patterns, and that's it. That's your basis for investment. If you are an investor, on the other hand, you're doing a lot more due diligence. You might check out the directors. You might look at the wider market to see who its competitors are, who the company's competitors are. There's a lot more due diligence that goes into it, and as a result, if you're confident and your analysis is really good, you can be happy that you've chose a good stock if your analysis is very good, because you do so much due diligence as an investor over a day trader. Hopefully you can minimize your losses. I know some people will say, yeah, spread betting's great, you've got all these stop losses and all the rest of it. How do you know when to put a stop loss on? Like, you don't really know. You don't really know. It's a big myth that, you just look at the trade range. Nah, not true. So we talked very briefly on risk. Let's talk about sort of the capital required, because this is another question that I get quite often that people come to me with. They want to get involved in investing, but they just don't know how much money they need. And if I'm brutally honest, I think with about £1,000, you can start off. I mean, don't get me wrong, you're not going to change the world with £1,000 as an investor, but it is a good starting point. And I'll go through buyers' fees, sellers' fees, and all the rest of it. But £1,000 is a good starting point, in my opinion. Some people will say you can do it with a little bit less. Some people will say you need about 10 grand or whatever. Look, it's up to yourselves. I mean, to be honest, if you were to use something like Revolut, which is a platform, we'll get into that in a couple of minutes, you can trade with a lot less than £1,000 if that's what you want to do. I think buyers, sellers fees are low, if not zero, on Revolut. So definitely one to keep in mind if you're just starting out. The fees on spread betting, so you've got a spread, funny enough, spread betting, a buyer's fee, a seller's fee. Your buyer's fee might be £101 for something, and your seller's fee might be 99. Before you even begin, you're down by £2, which is significant in itself. It means that your share price needs to go up by that much in order to just break even, which is a tall order, and that's why a lot of spread bettors lose money, actually, because of the spread that's charged on their position and the short-term thinking that's involved when you spread bet. But we'll go into that in more detail in either a future video or in this video. We'll see how much time we've got. So, okay, we talked a little bit about the fee structure. We talked a little bit about risk. Another key point is the tax treatment, which is often overlooked, but it is very key. So if you're spread betting, it's tax-free, which is a very good thing for a lot of people. Investing is taxable on capital gains, depending on where you put the money. If you put it in a LISA, if you put it in an ISA, slightly different tax rules. Fantastic thing about a LISA as well, if you're eligible for it, there are a few different criteria. This is for another video, slightly beyond the scope of this one, but it's something important to note. You get a 25% top up from the government if you put in money up to £4,000, I think. So you put £4,000 in, the government will give you £1,000 back within a financial year. If you're spread betting, you're going to use something like City Index, you're going to use something like IG, ETX Capital. If you're investing, you're probably going to use something like II, Interactive Investors, AJ Bell, for example, or Hargreaves Lansdown's a good one. Let's talk a little bit about leverage, because this is something that is often overlooked as well in investment videos for some reason. God only knows why. Probably because they don't know what they're talking about. But so let's talk about leverage. If you are spread betting, most likely you're taking out a leveraged position. You're not actually buying the underlying security, which is, in my opinion, it kind of makes it more risky for this reason. And I'll go into stock ownership and equity and the benefits of equity and what it exactly means. Spread betting, you're taking a derivatives approach. Investing, you're taking a long-term purchase of a company. You're taking a long-term position on a company. One thing that's very important to note is the percentage of people that actually lose money, either spread betting or investing. I think generally about 70% of people who spread bet lose money. This is hugely significant, and there are reasons for this. I touched on one just briefly earlier, which is the spread. By the way, there are spreads in both spread betting and investing, so it is something to think about. But because you're holding positions over a longer period of time, for investing, it's not such a big issue. But we'll cover that later on. High level, the difference between spread betting and investing. Spread betting, 70% of people generally tend to lose money. Differs on exchanges. Have a look and they will tell you how many people lose money. Now, it's actually very interesting. The nuances of the wording that they've got in that statement at the top, on that disclaimer, tells you an awful lot. That isn't to say that investing is completely risk-free. There is risk to investing as well. But if you do your analysis right, you can reduce that risk. So I hope that was helpful for everybody. It was just a very quick video to sort of hopefully highlight the differences between investing and spread betting. This channel is going to be heavily on the investing side because it's what I believe in. I don't really believe spread betting is the way forward, and I don't think it's amazing. Especially if you're a beginner. I mean, if you're a beginner, spread betting, that's difficult. Do it if you want, but personally it's not for me. So just to summarize very quickly, on the spread betting side, your time horizon's a couple of hours to a week. I wouldn't say more than a week on the spread betting side. On the investing side, you're talking a couple of years, could be even 10 years, 20 years, but it really depends on your own personal circumstance. What you see as well, sometimes you might see a fantastic company, you don't want to get rid of it. Sometimes you think management's just not doing the right things, and I'll go through all this in future videos, or the direction's just not where I want it to go, I'm going to get out of it. And you can make your mind up then, but just a difference there. Fees, you've got very much spread orientated on the spread betting side. On the investing side, you've got a long-term approach where there is still a spread, don't get me wrong, but the fees generally are your monthly fees, your trading fees, your buyers fees, sellers fees, which I'll go through in another video. Risk profile, spread betting, very high risk. I know you can use stop losses and everything, completely appreciate that, but still generally considered very high risk in the marketplace. On the other side, investing, don't get me wrong, still high risk, but if you do your analysis right, you can mitigate that risk. Tax treatment, tax-free on the spread betting side. On the investing side, depending on where you put the money, LISA, ISA, or just a normal stocks and shares product, you will have to pay capital gains tax on it. But again, beyond the scope of this video. And that's it really. Leverage, just to highlight as well. On the spread betting side, you can use leverage. You'll take out a margin, take out a position, and then trade within the margin. I can go through that in a video, but it's just something I don't want to touch on because I don't like it. I can explain it if people think it's helpful. Let me know in the comment section and I will make a video on that if people want me to make a video on that. On the investing side, what was I talking about, leverage, you can buy into ETFs which are leveraged and whatnot, but I mean, for the purposes of what we're going to do, we're not going to do that. I can talk about it if people want. Again, leave a note in the comment section and I'll make a video if people want content on it. Happy to make a video on it. So that's it really. So this channel, this is the first video I've made on here, but this channel is going to go through this. It's fundamentals of investing, what you need to look for. I'll go through appraisal techniques and hopefully try and market beginner, middle and pro. So for somebody who's just starting out, for example, this would be a very good beginner video for somebody. Just going through the difference between investing and spread betting. A medium video might go through SWOT analyses or pestle or something like this, and an advanced video, just as an example, might be weighted average cost of capital, discounted cash flows, CAPM, which I would hope to cover. Not a lot of people talk about it, especially in the context of investing. So if you like this content, want to see more content like this, please like and subscribe. I do intend to do many videos in the future about this topic. It's a topic which I care about, it's a topic which I like, it's a topic which is important. If it saves somebody a little bit of money because they just hold back and don't make that purchase, that's fantastic. If you use what I tell you and you purchase something and it makes you loads of money, fantastic. That's good as well. Equally, I'm not offering investment advice. I'm just giving you some tools that you can use to supplement your own decision. Do your own research, see what you think, see what you feel, and take your position in the market based on what you feel and what you think. Thank you very much. Take care. Look after yourselves. Subscribe and like if you like the video. Leave some comments on what you would like me to make in the future, because I'm very open to just doing different things. I am actually going to make a video on how you should go about this if you're interested in doing this. So now hopefully I've convinced you that spread betting is not the way forward. Hopefully I've convinced you that investing is the way forward, which is cool. If you are interested in investing, I will tell you what I would do before you start investing, because a lot of people jump in without actually clearing up their own personal balance sheets first, and I think that's a big mistake, because you need to be investing with disposable income. This is all beyond the scope of this video, but you need to be investing only what you can afford to lose and only what you do not need for the near term, because this is a long-term view. If you're not in that position yet, you can make better returns by just paying off debt, but I will go into that video in the future. This is just very much the difference between spread betting and investing. The page will be on investing. I might touch on spread betting later on, but it's definitely not the main aim. Also, another thing, I'm interested in algorithmic trading. I am making an algo bot. I do code in Python, albeit not amazing at the moment, but I am getting better at it. In the future, I might make a video or make a few videos on algorithmic trading, but like I said, that's going to be in the future. And if that's the sort of thing you want to see, like, subscribe, leave comments below. I will make content based on what you leave, so please just leave comments below. Take care, look after yourselves, and thank you very much.